This session is on best practices for vendor compliance audits. We have some questions that I'll ask the panelists, but it would probably be more beneficial to all of you if you've got questions that come out of what we say up here, or if you have them to begin with, try to capture my attention with waving a hand, and we'll try to address them. We'd like to have it be as beneficial for the audience as we can, so the presentation may do it, but your questions would be more valuable. So to begin, let me turn the presentation over for a few minutes to each of our panelists to identify themselves and say a little bit about their companies, and then I'll come back and we'll start asking some questions. Mark, you want to start?
Sure, thank you. I'm Mark Dapier. I'm the General Counsel, Chief Compliance Officer for a company out of Illinois called Turner Acceptance Corp. I've been in this business since the earth cooled. Going back to General Finance, which is a long time ago. I also am the Executive Director, I wear another hat, of the Independent Finance Association of Illinois, an organization that's been around for about 60, 65 years, made up of primarily privately owned consumer finance companies, installment lenders, and auto finance companies. There's no payday, there's no mortgage, no title loans. So I'm going to talk about the challenges these smaller companies have. Let's kind of arbitrarily say under 100 million in receivables. While we're all subject to the whims of the CFPB, these companies in particular struggle with what is right and are they doing the right thing. I'm also going to try to control my happiness because I just heard that Director Cordray is resigning at the end of the month. So that should tickle everyone's heart. So,
I'm Michelle Kirby, and I'm the Compliance Officer for MasterQ. MasterQ is a data aggregate software, and I'm here to talk about compliance and the best way to control vendor compliance and how to handle audits. That's about it.
Hi, I'm Sean Cabin. I'm Compliance Manager for Location Services. You might have heard us more in our last branding, which was PRA Location Services. We're a national forwarder, skip tracer, logistics, and key cutting service. And I'm also a committee member of IARA's Compliance Committee. I'm here to talk about compliance from the perspective of a forwarder and how we handle vendor audits and how we deal with our own vendors.
As you can tell by the companies that are represented here, we've tried to provide a spectrum on the issue of vendor compliance so that you can get the perspective from each of these representatives, from a software provider, a forwarder, and a finance company. I will ask again if there are any sort of burning questions, anyone out there. Nick will come to you with a microphone, so please raise your hand. No one yet? All right, let me fire out a question here. Mark, I'll ask you. What are the primary differences in the way a large and a medium to small size auto finance company should approach vendor oversight?
well, in one word, Jack, money. The big guys, Toyota, Ally, and so forth, if you've attended any of the industry meetings, I'm very active in AFSA. They were hit early on by the CFPB, and they settled quickly, maybe foolishly, but they settled. And they have thrown a lot of money into building compliance departments, hiring 18, 20, 25 people, traveling around the country, face-to-face interviewing all their vendors and so forth. The smaller companies do not have the resources to do that. The other thing is there has been a problem as to what a compliance management system that's acceptable to someone like some organization like the CFPB would really look like. Although they've given lots of pronouncements and so forth, there really hasn't been any hard guidance. I have colleagues, not necessarily members, but who range from having a notebook and saying, this is my compliance management system, to having relatively sophisticated computer systems and software to store policies and procedures to deal with training and the various compliance issues. So it's a matter of scale and financing. And there's this fear that we're not really sure we're doing what we're supposed to be doing, but we're doing the best we can. So that's pretty much the way I would look at this.
You tend to wonder with Cordray resigning and the Trump administration, the Republican administration putting somebody in his place, it would certainly be helpful to the industry at large if across the board the CFPB could clarify areas. They make pronouncements. They won't exactly say you should do what you should do, and it would be refreshing, and it would certainly be helpful to all of us if they could get more specific, especially on issues like what a large company and a small company should do. In my opinion, the large company tends to do probably the appropriate amount of effort, but in more cases than not, the smaller company probably does more than they should because they're fearful that if they do less, that they're going to be smacked for it. And small companies just don't have the resources, the time, the money to do it. And I think in many cases they're maybe overdoing it, and clarification from the regulatory agencies would certainly help that.
You know, prior to the CFPB coming on the scene, all of us, all companies in business had their own vendor management system. It was called performance. If you had a vendor that was not performing or was hurting your business or ruining your reputation, they were gone. Now, you possibly didn't go down and document every meeting you had with them, every conversation and so forth, but you looked at the numbers and you looked at the result on your business and you let them go. Now, in this day and age, that's not sufficient. You have to document this. You've got to do some vetting. You know, the attitude from the regulators, the federal regulators anyway, not so much the states, is that you're guilty of something. We know you are, because you're in business and you're hurting consumers. Therefore, you have to prove to us that you're not guilty of something. This is a tough nut to crack. It's very difficult to for example, if you drove to work and you're going to get to work and you're going to document at your desk that I did not run through any red lights today. It's documented, so therefore I must not have run through any red lights today. This is a challenge, particularly for the smaller entities. They're not staffed up. They don't have a clerical help. They sometimes don't have the computer systems that help them warehouse and act as a repository for their policies and procedures. So it's difficult.
Sean, did you want to add a little bit to this?
Yeah, as you alluded to in the beginning, it's very much a resource constraint with the smaller companies that we work with. They're not the Wells Fargo's, the Allies of the world, where they have the resources to send an auditing team out to visit us every year to get that face-to-face communication, which is just so key for really developing a compliance management system together with your clients. So with our smaller clients, we really try to push for quarterly and monthly conference calls so that we can all be on the same page of what's coming down the pipeline. We understand what we should be, what our goals are, and we can be hitting those goals at the time of the remote audit, so that we're not worried about having to do remediation on those packages.
Right.
Yeah.
Did that elicit any questions from anybody out there? Okay. Let's move on to another question. Sean, this question will be for you.
Actually, those are my slides.
Oh, yeah.
All right, let me go.
Yeah, well,
let me tell you how a smaller,
Yeah,
medium-sized
yeah.
company approaches this.
Yeah.
Okay, fine. Put my slides back up.
Sean, this question is for you. What level of transparency should a finance company expect from a forwarder?
The CFPB has made it very clear with their Bulletin 2012-03 and then the remix version 2016-02 that anything that is being done by a different entity on your behalf is something that you're responsible for at the end of the day. Indemnification, insurance, those matters are important as any part of a risk mitigation system, but they don't cover any sort of fines or fees that you'll be receiving due to this. And so what you need to do is just dig deeper and deeper into that transparency through both new technology which is coming out, which is being developed, such as MasterQ, which has integrated compliance management system tools in there, including telephone controls and notations and auditing systems that we can give clients direct access to, or other vendors such as Vendor Transparency Solutions, which hosts subcontractor level data that we can give direct line of sight access to our clients. And then additionally, and if you wouldn't mind moving one forward, Jack, please, on the slides, just so everyone can see what I'm talking about. That transparency down to there is really important. And then lastly, what we should be doing is, and this is something that I feel that we're not doing enough, and I've been developing through our interaction with IARA, is that it's not enough to just realize what your section of the compliance burden is this time. You have to understand both upstream and downstream what you need to be taken care of. If you're a forwarder, you not only need to be talking to lenders, but you also need to be talking to your subcontractors. You need to be talking to the auction services to see what else is there, because their pain points are very different. We might not have a good understanding of the effects of personal property on auction business if we weren't talking to the auction companies directly. It's making sure that they don't have headaches, the CFPB isn't coming in and talking to them, which goes up to our clients through a totally roundabout process, not through us.
A question for the audience. Those of you that are finance companies that are here in attendance, how many of you are using direct contacts with your repo agents, not going through a forwarder? How many of you are doing that much less than you used to do it before the CFP stepped in and created this vendor awareness thing? Raise your hand if you think if you're doing it less. Yeah, forwarders certainly can offer protection and assurance to you, but it's been a tumultuous time for the repossession agent out there. The dynamics of working through a forwarder make it more expensive for him, and in many cases he could work successfully doing some private work with financial institutions and also work through a forwarder. The ability now for the repossession agent to deal directly with a finance company has just become a really difficult challenge. And when we talk about small businesses trying to deal with things and not having the money, I personally feel that compassion for the repossession agent and how he's had to deal with things. And again, my hopes would be that if we have a new director at the CFPB, that things like this can be recognized and maybe some adjustments made so the market can maybe able to return to more like it was before the CFPB stepped in with all these vendor requirements. That's a little just commentary, but it's just something I feel strongly about. How about another question? Michelle, are you ready to take a shot at one? As a vendor, what does MasterQ do when a client requests an audit?
Well, when we first started 10 years ago, it was easier. We had one binder, policies. I'd stop and grab a box of donuts, and we'd be ready, bring on the auditors, we'd be done one day. Now we have a wagon filled with binders and procedures, and they come in, there's 4 of them, they come in for the entire week, they audit us, they check every nook and cranny, make sure there's not just enough to check the shred box, but they check everything, right? I'm sure I'm not the only one that they do this for. So what's changing, I think, is that they want to make sure that their data is safe. I mean, that's really the end game, right, for everything. They want to make sure that their data is safe from start to finish. And for us, I think it's a little bit more than, as a software company, they want to know that we're keeping their data safe, but we also have to help our vendors because we need to make sure that we're helping you when you're audited. So we keep the data safe, we're audited, and then when you're audited, we have to help you. Sometimes we are audited on your behalf. So we aren't even the client. It may be an auto company or a bank that comes in and audits up. They're not our client. They're your client. Mm-hmm. But we have to have them come in. We are being audited for you, and we do that. We have them come in. We do the exact same thing. We have them in for an entire week. They audit us. They check our nooks and crannies. We give them donuts. We make sure that they're comfortable on your behalf. We want to make sure that they are comfortable and that you're approved and that you get the deal. So there's some things that we do that I would recommend if you were going to be audited, and this is just from 10 years of being audited. I have the luxury and the privilege of working with a genius IT security officer. He's just amazing, but one of the things he does that I think is really important is he's not afraid to ask questions. If he doesn't understand something, it's new, and believe me, security and technology changes fast. So he's not afraid to ask questions, and we are lucky that with auditors, we give them the respect, and we keep those relationships, and we make bonds with them, so we call them back. If I don't understand something, we are able to call them back and say, hey, I have a question. They're really great about saying, what can I do to help you? So even though it may be a company that is long past and audit us past, we'll call them up and ask them, what do you think of this? What would you suggest? And they're really gracious about helping us. Stay organized. You're always changing. It's always growing, right? Don't be afraid to change the organization. Stay organized, because you've got to be able to put your hand on something at any given time. Keep good relationships. That is key. He tells me all the time, relationships, relationships, relationships. Not just with the auditors, but with the vendors, your clients, and your coworkers. They will get you through a tough question on a questionnaire, on a tough audit. They'll get you through those things. Always, always, always be honest. Don't lie. If you don't have it, tell them you don't have it, but you'll find out, you'll get it. If it's a remediation item, it's okay. They understand that. They will give you the time to do it. And never be late on an audit. Even if you have to get an extension, that's okay. They'll give it to you. Sorry. I'm a little nervous. Always communicate with your auditor. If you need if you want to ask more information to answer a question correctly, they're good with that. They will help you. They're there to make sure that they want you to pass this audit. They don't want to fail you. They want you to pass it. So if you talk to them, if it's your week and your deadline's coming up, call them. Say, hey, my deadline's coming up. Can we get on a call? I have some questions on the questionnaire. I have, what kind of documentation do you want on this? What can I give you that's going to give you the evidence that you need to make sure that I'm going to pass this audit without additional remediation? They'll tell you what they need and what they want to see. I mean, these are things that are going to get you through this audit so that you pass, right? And always, always treat your auditor with respect and courtesy, even if you think they're dumb as rocks. There are auditors that are box checkers. That's what he calls them, box checkers, right? They come in and they go, do you have this? They don't understand the question, but they're checking the box. And they come out and they don't understand the question either. That's okay. You still ask them, you give them what they need, and you treat them with respect. You want to do that no matter what. That's my advice, and it will see you through every audit.
Jack, can you go back to my first slide? I have some comments I think dovetails with this.
Sure.
No,
I think
keep going.
This one.
This one here. All right. Speaking from the perspective of the smaller lenders, now, most of them have been told that, using CFPB speak, that you need to divide your vendors into consumer-facing and non-consumer-facing. So with that in mind, every smaller lender has to realize that probably the vendor they have that's most likely to cause them an issue is their repossession agent or contractor or their forwarder. So that would definitely be a consumer-facing vendor. The other ones that would fit into that category would be your collection agencies, outside collection agencies, your collection attorneys, and those three things would be the most sensitive areas. Now, In most cases, the smaller lenders are not geographically spread out. So I think that even a smaller lender would be remiss if they didn't at least visit with those particular vendors. Face-to-face, you need to check their licenses, you need to check their policies and procedures, you need to check their insurance coverage, and make sure that you are given a certificate of insurance, and you're listed on their policy as an additional insured. You need to make sure that if they are a forwarder, what kind of insurance are they requiring from their clients, or what kind of insurance do they have? We were discussing this morning, there is an insurance coverage, which I think is called garage policy, where multiple repossession companies can share one policy. So you get $1 million policy, your repo man gives you a $1 million policy, you don't know that there's 20 other companies that are sharing the proceeds of that policy. That's not much coverage. So those are things that the companies that have been in business for a while are definitely going to go and look at in terms of a face-to-face audit. The second group are non-consumer vendors. That would be, in my estimation, that would be Michelle. I would not visit her, but I would send her, I would contact her, and I would go over her data security procedures, basically how she operates, and what kind of people are in charge. I don't know that I would require insurance. I probably would require some kind of insurance from her, but certainly less than I would require from Sean. In Sean's case, not only do I want insurance, I want him to indemnify me if there is a lawsuit. In the past, I've used other forwarders, and we have, let's face it, people who drive tow trucks and repossess cars are a different breed of cat. And they do things sometimes that are not predictable or acceptable, and they get into trouble. So because I don't have the ability to control that particular repossession person, I've hired Sean to do it. So if he or she gets into a major lawsuit, gets into an altercation, breaches of peace, whatever, I'm going to turn to Sean and says, you hired him, now you take care of it. And this is part of your contract, and this is part of your really important part of your compliance system, that you are able to protect yourself, and you're assuring yourself that you're using reputable people. Reputable companies carry insurance, are able to give you indemnity, have policies and procedures. The ones that are not as reputable don't have that kind of stuff, and you put yourself at risk by using them. You save $1 here, but you're going to spend 15 down the road because you're not hiring the best person to represent you on this. So I think the idea of reaching out and touching the consumer-facing vendors is really important. I don't care how big you are. If you're really small, you're probably only operating in one area anyway. You may have one towing company. Go out there and check their license, check how they handle their personal property, where they store the cars before they go to the auction. If you're in Illinois, you're required to do that. We have a pretty comprehensive Collateral Recovery Act that requires the repossession companies to pretty much toe the line on that kind of stuff. But that's not a lot to ask even from a smaller company. So I think that is probably the minimum you can do.
Thanks. Sean, do you have any comments to make on this, on the area of what's expected on an audit? Or do you think it's been covered?
Well, Mark went over quite a bit there, so
It's okay.
There's a lot of go
Doesn't
over.
mean I'm right. Go ahead.
No, I think you're right on everything, so it's easy. I just want to say what he said then. Well, the thing is, he talked about us forwarders being there to manage the repossession companies, and that's what we're there for. I mean, originally, forwarders were like people you used to hide behind. Something came up, the forwarder was the one who took the heat, and you used us as chaff. Obviously, that's not the case due to the CFPB's involvement in determining where fault is laid ultimately. But we're still there to provide that sort of oversight, that compliance management system that understands how this work, our day-to-day operations with these. We're acting more as a vendor manager than a separate entity in this sort of situation. And we have to be there in case something does happen. We have to be there with the notification. We have to be there with the second layer of insurance. We have to be in there with the auditing trails, anything that we need to do to prove the CFPB that due diligence was performed and that there was not a negligent action being taken place. And then kind of touching with Michelle's points, the rise of these other platforms has been a huge benefit to our forwarders. Our relationship with MasterQ and any forwarder's relationship with their software platform provides a level of information security and understanding of informational systems and data control that, it's pretty obvious is going to be very huge in the near future based upon recent activity. And we need to keep on building that relationship and digging deeper. I think I'm on the phone call with Michelle like pretty much every week, if not every other week, to go over items, and we're emailing constantly. That's how close the relationship is.
One more point. If you look at the bottom of that slide, one more tool that the smaller lender should utilize It's been endorsed by the American Financial Services Association's Law Committee, and I have my own version of this. Is I require all of our vendors to sign an addendum to their contract with us that essentially says, number one, you will follow the law, which of course they have to do anyway, but it sounds good. And if you don't follow the law and you don't correct it, regardless of what the term of the contract is, we get to fire you. I've not had one vendor reject that yet. And I think that's an important tool. If the CFPB or some other regulator came in and looked at you and said, well, you haven't checked out these vendors. I said, well, look, we monitor their performance. We've done our basic due diligence, from a distance. And if there is a problem with the way they perform, in our contract, we get to get rid of them if they don't comply with the law or they don't meet the current requirements on that. I think it's a powerful tool that you can utilize. And, it's not difficult to implement at all. And if you have a vendor that resists this, then you got to ask yourself, do I really want to deal with that vendor? You're telling me you don't want to follow the law? If you're violating the law, I can't terminate the contract? I'm sorry, I'm not really interested in doing business under those circumstances.
An observation I have on this and several other areas that are the CFPB impacts the financing world is informal communication. The NAF Association has a group of the graduates of our certification program that meet quarterly, and they meet quarterly in 3 different areas of the country. So the compliance people get together, and they share information there. And I would say about 1/3 of the questions fall into the area of vendor compliance. Mark just mentioned about the garage coverage at $1 million. Looks good, but there may be 10 companies tied onto that. That's something I didn't personally know. And if you didn't know it, and now you do know it, you should probably go back and look at the insurance coverages that you're expecting to be $1 million to see if in effect that is a group of companies and maybe your exposure on your coverage on an insured claim may be less than $100,000 if there are a lot of them in there. But my point is there are nuances to the oversight of vendors, and talk to your competitors. Talk to the people in the industry that are doing this. Find out who does what you're charged with doing at another company, and build a bond with them, and share information. This isn't anything to do with antitrust. You're all just trying to keep yourself in compliance. And subtleties like this insurance thing would be revealed in those kind of settings much more likely than you would find in a conference or something like this. So it's an avenue I encourage you all to pursue. Informal relationships. Bolster your ability to do your job with that. We're sort of winding down here. We have less than a minute. Any questions from the audience? Come on, there's got to be somebody who has something. Nobody with anything? Well, I want to thank you for attending the event. I want to congratulate Nick and Cherokee Publishing for this first block of sessions. It's been a wonderful experience for me, and hopefully it is for you. Let's acknowledge our panel, please. Thank you all, and have a good day.
Absolutely. Thank you so much, Jack, and to